Our firm name, Nia, means intention and purpose. So how can we bring intention and purpose and transparency into building products that really appeal to women? So we don't start with a cap size. We don't start with domicile. We start with what is needed for people and planet. And then we back up from there. And that's how we got, using systems thinking, I developed our 6 solution themes, highly aligned with the UN Sustainable Development Goals. Less than 1% of the 84 trillion in the US is managed by women managers. It's an incredible impact to move your money to a woman or person of color.
Impact index funds versus active funds in the impact space.
Women in general aren't as interested in a linear economy. We really are more interested in a circular economy, and we're not as interested in a cap size of a company. We want to know what the company is actually doing. And so what are the products and services? And then of course, who's managing this?
Hello and welcome to the Investing in Other Stories podcast. I'm Margarita Tr, your host and founder of Finance Latte, a leading investing education company. The information on this podcast is for informational purposes only. It should not be considered investment advice. Stay tuned for more important disclosures at the end of this episode. Our guest today is Kristin Hull, founder and chief investment officer of Nia Impact Capital. Kristin is a conscious investor empowering individuals and organizations to invest in alignment with their values. Kristin launched Nia Global Solutions in 2013 to bring activism and impact investing into the public markets. In doing so, she developed Nia's 6 solution-focused investment themes, weaving a gender lens throughout the investment process. She also launched Nia's Racial Justice portfolio in 2022. Kristin is devoted to promoting inclusion and diversity in leadership, to re-envisioning capitalism, and to changing the face of finance. She serves on the leadership committee of How Women Lead and on the board of multiple impact and charitable organizations. Kristin holds a PhD in urban education from the University of California, Berkeley, a master's degree in research in bilingual education from Stanford University, and she earned her bachelor's at Tufts University. Kristin, what an impressive career and what an impact maker you are. A warm welcome to our podcast.
Oh, thank you so much, Margarita, for doing this and for including me today.
Wonderful. I can't wait to get started. So I read that you first learned about investing at 14 years old from your father and his trading company. That's so fascinating to me. And it seems that you have taken a different approach to investing in your career. Tell us a little bit more about that journey.
Sure. So it was not the standard. Most women don't get included in conversations about finance and they don't get passed down. At least in the US, we don't have many opportunities for curriculum. I believe the last time I checked, it was 11 states that required some sort of financial literacy to graduate from high school. California is not one of them. And that's where I grew up. I did grow up in a trading firm. So my dad started a trading firm in our garage, as one does in California. And I was integrally involved, both from the backseat of the station wagon to dinner table conversations, and then being a clerk on the floor of the trades in Chicago. So I did grow up with all sorts of vocabulary. It was very transactional. That's what trading is. A particularly high-speed algorithmic trading is buying low and selling high as often as one possibly can. And yet I really wanted to make a difference. My formal education is in education. I became a classroom teacher while also being involved in the trading and having that be our family business. And it wasn't until we sold that business where we all got to take a step back and really see what's next. And that was an opportunity for me to combine my 2 worlds of social change via education and financial markets. And so designing Nia, our firm name, Nia, means intention and purpose. So how can we bring as intention and purpose and transparency into building products that really appeal to women? So we don't start with a cap size. We don't start with domicile. We start with what is needed for people and planet. And then we back up from there. And that's how we got, using systems thinking, I developed our 6 solution themes, highly aligned with the UN Sustainable Development Goals. All of the companies we look at, we start with products and services. What is beneficial and needed in our transition from our incumbent economy, which is extractive, to a regenerative and sustainable economy? And then what will the market reward? So really shifting and yet using all of the tools that I grew up with and then making them my own and then building something that will really work for women, young people of color.
Fascinating. And before we dive into the details of the many facets of your business and your investment philosophy, I want you to explain to our listeners, most of whom are outside the finance industry, the difference between ESG and impact and where you think Nia strategies fall under.
Sure. So it's a great question. And a lot of us are asking now that the letters E, S, and G, environment, social, and governance, have been in the headlines and there have been some pushback. It's actually an opportunity for many of us to become more conscious about where our investments are and what are they doing. I started Nia way before those letters had become common nomenclature and part of our vocabulary. So what we were doing is really just conscious investing, is really inviting our investors and everyone to look at what they own. And sometimes we call it an opening the envelopes, because oftentimes you'll get financial statements and they'll just stack up because we don't know how to look at those. We don't know what they mean. There's lots of ticker symbols. And by the time you finally learn how to read a statement, maybe from an advisor or a banking institution, by the next quarter, the formatting has changed and then we don't really know how to look at it anymore. So wanting to take what was a system that didn't work and make it much more transparent, but looking at what do we own? If there's a ticker symbol for a mutual fund, say there could be 2,000 to 8,000 companies in that mutual fund. So our advisors oftentimes don't even know what it is. So what we're trying to do is say, hey, we can actually know what we own and then be very conscious of what we own and then direct what we own and be really proud of what we own. So owning what we own in the literal sense, but then also saying, oh, do all of the companies in my portfolio match with my values and where I want the world to go? Because we do get the economy we invest into. So investors don't know this so much, particularly women investors. We are incredibly powerful to be able to direct money to the economy. We actually are creating the economy with every check we write, but particularly with every investment we make. And so that's what we see as, I guess, conscious investing, is being conscious and then directing things to where we go. So your question was really about ESG versus impact. So let me get there. All of our money is making an impact, every dollar. It's more being conscious of what kinds of impacts we're making. Is it a positive? Is it a negative? Are we investing in companies that have women in leadership or diversity in leadership because we want a world that has diversity in leadership, then just making sure. So that's both using an ESG lens, by using a gender lens to look at a company about, well, do they have women in leadership? It's also making an incredible impact by moving money to companies. If you were to say, oh, I want all of the companies in my portfolio to have women in leadership, then I would move to, something like that and have a big impact that way. Similarly, so I'm an asset manager. Women asset managers, we make up just 0.7%. So less than 1% of the 84 trillion in the US is managed by women managers. It's an incredible impact to move your money to a woman or person of color. And that's also using an ESG screen. Sometimes people think of the ESG really just as the E. And often that's actually very gendered too. I think the men really look at the E and the women often look at the E, the S, and the G. At any rate, both a screen to de-risk a portfolio by saying, what are the potential risks that climate change, in the case of E, would have to my portfolio? Do I have a lot of companies with manufacturing facilities in places that are going to be affected by climate change? This is often the way we do it at Nia, is what are the solutions that are needed to get us to an environment that's actually regenerative and sustainable? And how can I invest my money in those? And in our case, we build portfolios with solutions-focused companies that are actually working on the solutions to some of the climate change issues. So everything from renewable energy to more sustainable buildings, green roofing, sustainable transportation, etc. Is that helpful?
That is helpful. And if I attempt to summarize, what I hear is that your strategies can fall both under ESG and impact, depending on what angle you're looking at it from. Is that correct?
Yes. And then with the case of public equities, we are having the impact both by choosing the companies that are doing good for the economy, for the environment, socially, and that have strong governance. But then I would say our added impact, which is pretty unique to Nia, is that we actually engage with every company in our portfolios. So we do it both as due diligence to get to know the companies better. We also ask them for best practices and we make requests. And again, using our investor voice, we can get a lot done. Investors make requests and then companies are required to respond in some way. They don't always respond. I mean, not all of our companies are responsive, and yet we do look to build a win-win relationship with all of the companies that we can. And then we share with them best practices. So everything from reproductive justice and health. And fortunately, where you are in Europe, you're not having these issues as much. But in the US, we're having quite a bit of issues where companies are the ones that are providing the healthcare. And so if we have employees located in a red state, how are they going to get the same healthcare? And so we are talking to our companies about making sure that they have travel policies in place, that this can all be done anonymously. And we actually we work with our partners at Whistle Stop Capital to track what the behaviors and the policies are across the spectrum. So we can share that with our companies and tell them where they're best in class, where they're lagging, and where we need to see improvements. So we're making a pretty big impact on each of these companies via these conversations.
Exactly. And that's where the next level action step, so to speak, is and comes into play through a strategy like yours. That's wonderful to hear. You touched a little bit already on the ESG and how it becomes so political already in the US. And again, as you mentioned, in Europe is a little bit different. Europe is a leader in ESG, but even here, there has been some fatigue as growth in the assets appear to slow down a little bit. But just moving forward, what are you most optimistic about the impact investing space, and what will impact investing 2.0, so to speak, look like?
Sure. So we do have some hurdles because so many potential investors don't even see themselves as investors, and particularly women. Most of us have a savings account. Many of us have an investment account. In the US, people have 401k accounts, and yet they don't see themselves as investors. I think that the challenges that many of us are experiencing in the US with the shift in government and who's in the White House is actually having us look at our investments because we want to have some power in the situation. I think the backlash has helped because it's offered us the opportunity to ask the question, where are my investments? Are they aligned with my values, be them political, environmental, social, etc.? And then wanting to really make sure that we are reducing risks in our portfolio, we're going to want to have our companies aligned. So I think that the 2.0 is that women in particular are getting really empowered to look at their investments. The other piece that's happening in the US, though I believe it's global, is this great wealth transfer where money is going from traditionally the hands of the men to, over the next 10 years, into the hands of women. And women are going to be really big wealth holders, both because of their own earnings and also because of inheritances that are happening. And so the wealth management industry is going to need to change because they're going to be, hopefully, catering to women who have some really different needs and some different desires. You know, as I kind of mentioned how we build our portfolios, women in general aren't as interested in a linear economy. We really are more interested in a circular economy, and we're not as interested in a cap size of a company. We're just not interested in size. We want to know what the company is actually doing. And so what are the products and services? And then, of course, who's managing this? What is the governance? And is it the team that can actually get this done? And the research does show that a diverse team, there's quite a bit of advantages to having women in both the C-suite and on the board. I believe that the next 2.0 is going to have women asking for the things that they want, and then more products designed to support that, which will increase the level of impact and positive impact across the board. It's almost like all ships rise. I think with the demands for these new products, it will change the way we think about investing across the spectrum globally.
I'm excited to witness that next stage of transformation in wealth management and asset management products. So my next question, which ties to this, is gender lens investing. Just very briefly and simplistically, can you just tell us what that is? Why do we need it? And why does it work?
Sure. So gender lens is just what you would think it is. It's using the lens of gender to look at an investment decision. And so sometimes it's looking at a company, and there's various levels you can bring that gender lens in. So we look at products and services. So which products and services are beneficial to women and girls? So the easiest place to connect the dots there are products that are actually designed for women in mind. So you think about healthcare, one of the things that we as investors can do is devote more money to some of the health gaps that are happening. So if we're investing into companies that are focusing on women's health care, that's one way to use a gender lens. It could be in consumer staple products. We're actually looking at some of the companies that are looking at some of the things that really make sense for women. And we do that across each of our 6 solution themes. So maybe hardest to actually connect the dots, though we see a real crossover there in our Venn diagram is climate and women. And so with women oftentimes suffering some of the greatest barriers of the issues of climate change, we're looking at preventions there. So we definitely want to see some of the renewable energies in our portfolio. And then, of course, we want to see women in leadership at those companies. So that's another way to use your gender lens is looking at the boards and looking at executive teams. And then we also go deeper than that and we look at policies and practices within a company. So I talked about our work about reproductive healthcare and making sure that women are receiving equal healthcare and all of the access that they need to healthcare through their companies. We're also looking at pay gaps within companies to make sure that even though there are rules and laws about that, are the companies keeping up with that to ensure that there won't be a pay gap. We're also looking at policies and practices like NDAs and forced arbitration. Those are largely in the US. And yet we worked with Apple to have them remove NDAs from employee contracts because NDAs are associated with women and people of color not advancing in their careers. If you think about like sexual harassment and then not being able to talk about that can be issues. And same with forced arbitration, that can cover up issues of sexual harassment or racial discrimination because things happen in a closed door behind the curtain rather than in an open forum like a civil lawsuit. So companies that are using forced arbitration, it's almost like a Band-Aid covering up what could be a systemic issue. We're noticing issues like that at Tesla, where there's rampant racial discrimination claims, and yet employees are not able to have remedies based on some of these policies and practices. So we are talking to companies using those lenses about what they can do to have more equality. Also going to looking at hires. And so where are you doing recruiting? How are you doing your hiring and using a gender lens? I could go on and on. There's lots of just basically bringing that to gender to every decision that's being made by the investor.
That's so wonderful to hear. I am familiar because I've done my research in some of those themes like forced arbitration, NDAs, etc., and the impact that those have in the organization. But it's just wonderful to hear from an investor standpoint that you use your power as an investor into these companies to try to make impact, to educate and push for change. That's really putting your money to work and bringing change through your assets. I think these are the strategies that a lot of people do not really know they exist. So I'm just really glad we're having this conversation. Next, I would love your thoughts on impact index funds versus active funds in the impact space. Can you just give us your take on active versus passive?
Sure. And that is actually a gender lens issue. And I'm trying to dive in. People don't really think of it that way. So what is an index fund? An index fund in the US, probably the most popular brand name would be the S&P 500. And that is, just as it sounds, it is our 500 largest companies publicly traded in the US. They're looking at domicile, is the company headquartered in the US, and then they're looking at size. Those are not the 2 most important criteria for women. And index actually comes out of modern portfolio theory that is no longer modern. It was developed 50s, 60s of the century. Most academic theories do get updated every 5 to 10 years. So why has that one not? And that one has been flawed from the beginning. We have so much more data, and yet why is that not being updated? Modern portfolio theory is really about diversification, and there is a lot of reason to do diversification. And indexing became popular in the 70s and 80s because you could own a little bit of just about everything in the market. So in this case, the 500 largest across all the sectors, oil, gas, weapons, tobacco, all the things. And the idea would be that you would be diversified and do well based on being exposed to so many things. Some indexes have, like the MSCI ACWI, which is a common benchmark as well. That's a global index that could have 8,000 companies, between 2,000 and 8,000 companies companies at any given time. So why is that an issue? Yes, you get exposure to all these things, some of which you want and many of which you don't want, but it's all in the bathwater. And nobody is monitoring those outside of their size or their domicile. That's not enough. It's not enough, in our opinions, to be able to judge a company based on how many dollars it's managing on its cap size or where it's located, because the economy really is global. So we want to know where the revenues are coming from. Are they coming from one or more of our 6 solution themes? Is the revenue all coming from the US in one particular sector? So we want to see diversity across revenues, across geographies, and then also across products and services. Where I want to go with this, and I welcome anyone listening to this to get in touch with me if you have information about this, because people talk about this research that says that active management cannot outperform passive management. One, it's really old research, but also my understanding is that there were no women managers involved in the study. And more recent studies say that women actually manage money as well or better than their male counterparts. So if we are missing opportunities to invest with women active managers based on outdated research, I want that to come to the surface. And I would also love to participate in helping bring that research. So active management is really a more hands-on approach than what is a passive index. There are the S&P greener versions, the ESG versions. And what do? They take this large body, 500 companies, and then they pull out what somebody, based on some sort of research or rating, feels is a bad company. But it's not really clear sometimes what those ratings are, and they're not a perfect tool. So we would much prefer to look at a company holistically, starting with products and services, and place it very intentionally into a portfolio based on the criteria that it meets, rather than just saying, okay, these are our universe of companies and we'll pull out based on something. Because one, we're not all going to agree on what those ratings are, but then are they even up to date? And we've seen this from various ratings companies that our research is more up to date than the way that they are rating these companies. So there could have been a merger acquisition where a company let go of all of its oil revenues. So now it's actually quite green because it sold off that part, and yet it's still under last year's ratings. So there's things like that for us, an active approach is going to be more authentic and I guess give probably better outputs when you're actually doing all that research yourself.
Of course. And from my perspective, the way I understand the ratings and the difference with your strategy from what I'm hearing is that the ratings will not go out there and find products and services that serve women. They're just not going to do that. They are going to find companies that are green, might have some policies in place that check the box, but they don't have that intentionality that you do have.
And they're not having these conversations with companies. It's usually based on what a Bloomberg might print out or that you could see on a Bloomberg screen. So it's up to us. So it's like this whole chickens and eggs about the whole industry, because Bloomberg, designed by men for men, how can we get more women on the Bloombergs asking for different types of data that are actually material? So I want to give a shout out to SASB as far as what is material for financial returns, but then also for future risk. So there's all sorts of issues that we see with some of the rating systems that we want to take it another level deeper.
Wonderful. And I do want to ask about the perennial misconception of how when investing with impact, you're giving up returns. How would you recommend that investors change their mindset from thinking that when they're investing with impact, they are making that decision of whether they're choosing return or impact, and it's either or, while in reality, it might not be? What is your take on that?
Whoever came up with that dichotomy felt threatened. You could see that they felt threatened. And oftentimes you can just follow the money about where this rhetoric is coming from. And it's often somebody who has a pretty significant stake or is currently benefiting from either a tobacco industry or a fossil fuel industry, because they don't want you to take the money away from that industry. And so they're saying, oh, if you're not exposed to all of the energy types, then you're going to lose money. It turns out that there's actually some significant research, and some that came out last fall, looking at pension plans over the last 10 years and pensions and retirement money, I believe, state by state. And those that had no exposure to fossil fuels did better financially. And as we are seeing more political risk, but also climate risk, I don't think there's any one of us that hasn't experienced some bizarre climate situation this year or doesn't know someone who was really adversely affected, either their business or their home, by some of the climate things that are happening. So even though in the US we're up for debate about climate, the rest of the world really isn't. And you can speak to this, of course, from where you are in Europe. I believe that there's all sorts of dichotomies about where we stand on the political spectrum, and yet there's a pretty common understanding that climate change is actually a thing that we as investors need to look at the risks of that.
Then what is the next step? How do you perform that return comparison? How do you convince yourself to do like the calculation?
Okay, yeah. The other piece about that feels really important is that, again, this is so gendered. There aren't any women saying that adding women to a board is going to skew your financial returns. And there's actually some pretty significant research that diversity, both in leadership and then on teams within companies, is actually really beneficial. And there's some anecdotal and other research that's interesting. The minute you add a woman to the board of directors, meetings start on time, they're more efficient, and women actually, just in general, are not comfortable voting or making decisions without material, without understanding the facts. And I like that as an investor, because if a woman is on a board of directors and they see that this year's numbers don't match last year's numbers, we want to know why. And we're not going to vote and just rubber stamp what one of our colleagues has done without really getting into how this is going to affect the company. So women do ask more questions. Doesn't make us very popular on boards, and yet it does make the process more in depth. And so there is quite a case to be made for stronger governance, which will then lead to better returns. So we are following this both because it's the right thing to do, but also because we are looking for the very best returns for our clients. And we believe that adding these areas of impact, both because of the research, but also our track record shows that adding these can lead to outsized returns. So just back to the rhetoric, we all need to have our marketing budgets be bigger so that we can get the word out that adding these additional criteria can help with returns. And it's not an either or. You can actually have profit through purpose. We're a B Corp company, and that's the motto of B Corps. B stands for benefit, so beneficial corporations. And there's quite a strong, rigorous program to get certified. And it often takes companies years to do that. And then once they're certified, they need to be recertified every 3 years. And these are all the best practices with human capital management, with hiring, with how to treat employees, to look about how to do contracts with service providers and thinking about their impact and how they're doing their hiring. It's pretty extensive as far as emissions, and it's stronger companies. Those companies that are doing all of that are actually stronger. And so they're going to ultimately have better financial returns over time.
Exactly. And there is so much research around individual elements, of course, women on the boards, women on the executive team, the diversity of opinions, and not just by gender, by racial diversity, etc. These are all well documented individual factors that influence performance, corporations' performance, etc. And yet, when you wrap it up in a financial products, people still immediately think of, oh, I'm giving up return. It has stuck somehow in the retail investors' minds. Hopefully, part of this conversation helps people rethink that. So impact investing, as you already mentioned, also involves shareholder activism and voting. So can you share an example of how you created change through voting and how it must have felt incredibly rewarding to bring the change?
Sure. So that is part and parcel. We see our shareholder activism both as a responsibility of being an active manager and then also a right of investors to be able to talk to companies to advocate for more change. So we do seek to vote all of the proxies, and we do a really careful investigation. We work with partners on this as well to be able to vote in the very best interest of the company, the shareholders, and our broader global community. So being very good stewards of capital means weighing in and not just going with management. But then we also, as I mentioned, we seek to have a conversation or a dialogue or a relationship with all of our companies and keeping them on track. And so that can actually lead to filing shareholder resolutions that then appear on the proxy ballot as well. So we've brought issues across the board from diversity reporting at IBM. We actually won that at 94% of the vote, which was pretty outstanding. They ended up actually recommending our recommendation and then working with us, which that was also unheard of and also very welcome, particularly for a large company like that that's working on AI. We're also holding Tesla accountable for racial discrimination. We don't hold that in our portfolios anymore based on a lot of issues, and yet we do continue to hold a little bit of it so we can continue our activism there. But then we also talk to many of our companies about their scope 1, 2, and 3 carbon emissions reporting, wanting to see more reporting, both so they can assess opportunities as well as risks. We've talked to Tesla again about child labor in their mines. We haven't had progress there, though we will continue raising our voice. So all of the different things that could be material across the E and the S and the G are topics that we bring up with companies.
Wonderful. That's such a great example. And you can see the impact at play. You mentioned a little bit AI, and I wanted to ask what impact initiatives you're undergoing in that area right now. And just in general, are women underrepresented in the management and the leadership of the AI related firms at the moment?
Oh my gosh, that is just the same as so many other issues. And of course, we have so many concerns. I mentioned that in wealth management and particularly in asset management, where I am, we're less than 1%. So 0.7% is just so women are not making enough of investment decisions. It's quite similar in AI. So if we think about the wide and expansive adoption of AI, we are going to need to have more diversity at those algorithmic tables. And that's one of the reasons we were quite active with IBM, because they are one of those that's working on the AI, and we want to see diversity across those tables. We have quite a few concerns, both on how these algorithms are really going to shape our lives and are they going to have women's perspective, as well as other perspectives that may not be at that table right now. And then we also have significant concerns about the climate. And do we need to adopt these knowing that the carbon expenditures are so high? So where can we think about this holistically?
Interesting. You mentioned earlier that women control less than 1% of the fund assets. And again, we're here at this podcast to highlight a lot of top professional investors like yourself. What else can be done to bring more women in leadership roles in the finance industry and asset management in particular?
So we've taken that on at Nia, where we have a Change the Face of Finance internship program, and we welcome in young women, people of color, and we train them in everything that we're doing as far as ways that we're looking at companies, ways that we are getting our diversity numbers, ways that our companies are doing their political spending. And we help them open their first investment accounts. And we put our mutual fund in that so that they can follow that and become investors themselves. So really starting at a young age and welcoming them in to what working at an asset management firm can be. We're a small firm. We take in as many interns as we can. And yet that's one piece of what we can do. We do encourage others to build internship programs, and we work with others to say, hey, you could be doing this too. Our trading partners in Chicago also have very few women on the trading desk. And so we encourage them to include women in their training programs. We do think that change happens one conversation at a time. Some of it is going to be having this impact and ESG opportunities grow because women get more excited. They get more interested when it's not looking at a linear economy, that it is taking holistic action. So I do see the rise in women entering the industry also tied to us really looking at impact metrics as well. Wonderful.
And what advice would you give then to young women who are considering a career in finance? Besides contacting you for an internship, what else can they do to get started?
Oh, sure. Some people ask me about the major you need to do in college. I don't believe that's as important, particularly for the impact investing. We want a global view of the world, so you don't have to major in economics, although obviously being very interested. And there's so much self-tutorials you can do online as well. We certainly love when people come to us with different backgrounds, but also applying for across the spectrum from banking. We need all of the big banks, all of the custodians to have more applicants. So knowing that you can bring your voice and yourself to some of these larger places. Also, I think women are not as confident sometimes in advocating for themselves. So that's something that we do try to train our women in, is that you are as good or better than your male counterparts, and to bring your voice as being really necessary to be in that position, even if it's a small position to start.
Wonderful. And is there a book about impact investing that you recommend to those outside the industry?
My lovely colleagues, Patience and Ruth, wrote The Double X Edge, and it's unlocking higher returns and lower risk. I was thrilled, of course, that they wrote about Nia as one of their case studies, but really looking at the research behind why using a gender lens in investing can unlock higher returns and lower risk. So that one I love. This is the newest one out. Also a colleague of mine, Jasmine Rashid, who wrote the Financial Activist Playbook. And this is really for people outside the industry that just want to think about how to activate their money. I was honored that she interviewed us about the public equity section, but she's a really fantastic change maker and made this really accessible book. So really happy about that one. And then another fun colleague is Janine Firpo. And this one is Activate Your Money, Invest to Grow Your Wealth and Build a Better World. She is taking largely women. It's really written for everybody, but she does chapter by chapter about simple ways that you can activate your money for good and for impact and for growing your wealth.
Thank you for sharing. These were not on my radar, and we'll definitely include them in the episode notes so that people can find them. And last question. A lot of women I meet are greatly interested in impact investing, but they don't really know where to begin. What are your top 3 tips in order to get started with impact investing?
Sure. I think my biggest tip is you can start anywhere. It's not linear. You can dabble in various places. So some people like to start with their cash, because you could move your bank to a values-aligned bank in your local community. You could move your cash to C-Note, which is another colleague of ours that does really lovely impact investing across CDFIs, which are local banks across the US, and largely into women entrepreneurs who are using those to grow their business. So that's a lovely place. Or moving your bank, you're not going to decrease your returns or your risk, and yet you can increase your impact really pretty straightforwardly. The other place that can be pretty easy is the public equities. And that's why we work in that space, because there is liquidity, meaning you can come in today and leave tomorrow if you need to. So there can be flexibility about that. And yet you can really increase your impact by moving to a woman manager, to some of the active ESG strategies, et cetera. And then also, I would say the tip is knowing that your voice matters, because the industry really does respond to investors' requests. So if you go to your financial advisor and say, what are all the women managers? Or how can I find out about Nia? Or how can I find out about a lower carbon or more women products, et cetera? They need to do that homework, and you're paying them fees to do this. So it's their job to respond, and then they get to learn along with you if they don't already know those things. So it can really be a win-win about using your voice and then talking about it. I would say in general, particularly in the US, we don't talk about money. It's become pretty taboo. And so talking about it with your friends, talking about it with family or colleagues, and of course your professional advisors, et cetera. What do you want to do? What's possible? What's possible for you? We have webinars once a month on different topics, and we have events for women, et cetera. So get connected maybe in your local community. Invest for Better also has investment circles where they put women into circles that do, I believe it's a year-long curriculum together, maybe meeting once a month. I do some of the guest speakers in some of those circles, really empowering to be able to use their voice to ask for the impact that they want in the products that they can access across their portfolios.
Sounds wonderful. And in a similar vein, we advise our community to grab a girlfriend and grab a fika, as it's called in Sweden, which is essentially go for coffee and chat about money.
Yes, exactly. And we don't need to do this alone. This is, I think, the patriarchy and our society has made this, oh, we're doing this all alone by ourselves. And there could be a layer of shame, either that we don't know enough, that we haven't saved enough, that we haven't started our 401k investing yet, or that we have too much and we don't know enough about it and we haven't figured these things out. But what I've seen is shame on every level of the spectrum for women about money. And that's just the patriarchy speaking. There's no reason you just start where you start, and you start learning as you start having the conversations, and to bring friends. Certainly. There's a group in New York that before the pandemic was hosting break up with your bank parties. They were bringing cupcakes. There were pink t-shirts about that, and they were all going together. I think we are going to be stronger together. We're going to learn more together. So trying to normalize talking about money, talking about gender lens, talking about bringing women to invest with their values is going to help everybody.
Wonderful. Could not agree more. Thank you so much for your insight, for the insights into impact investing, your encouragement to our listeners to start investing, invest more, think about impact, put their money to work, and make the world a better place. Thank you so much for joining us. And thank you all for listening to the Investing and Other Stories podcast. If you enjoyed this content, please take a moment to subscribe to and rate the podcast on Apple, Spotify, or wherever you get your podcasts. You can follow me, Margarita Tr on LinkedIn or at Finance Latte on Instagram. And you can learn more about Kristin Hull at Nia Capital's website. And please check out her community events as well on their website. Cheers and see you next time. The information provided on this podcast is for informational purposes only and should not be considered investment advice. The opinions expressed on this podcast are as of the day of the recording and are subject to change without notice. The views and opinions of guests on this podcast are not necessarily those of Finance Latte AB or its host Margarita Tr, collectively referred to as Finance Latte. Finance Latte is not affiliated with its guests or their affiliates unless otherwise stated. Finance Latte does not guarantee the accuracy or the completeness of the data presented herein. The information on this podcast is for informational purposes only, and the information, data, analysis, and opinions it includes should not be considered investment advice or tax advice, and is therefore not an offer to buy or sell a security. Finance Latte AB is not responsible for damages or other losses resulting from or related to the information, data, analysis, or opinions in the recording. Past performance does not guarantee future results. All investments are subject to investment risk, including loss of principal. Individuals should consider their own unique needs and circumstances and objectives before making investment decisions. Please consult with a tax or financial advisor for advice specific to your individual circumstances.